You've probably heard it 1,000 times. The most important thing in trading is risk management. Everyone says it. Every book, every course, every YouTuber. Only risk 1% per trade. Always use a stop loss. Preserve capital at all costs. And yes, I 100% agree, of course. But today I'll tell you the part that often gets left out. Risk management is useless if you're trading a losing strategy. Managing risk is not a strategy in itself. It does not make you profitable. So if you're trading a losing system, good risk management won't make you win. It's just going to make you lose slower. If your edge is garbage, risk management is just a seatbelt in a car that's already flying off a cliff. It might slow down your death while you're rolling down the mountain, but it's probably not going to save you from dying. So in today's video, I want to set the record straight because most traders are hyper-focused on how much to risk. How much should I risk on a trade without ever asking on what? Right? The money I'm risking here, what am I risking it on exactly? So let's be clear from the beginning, risk management is crucial. Risk management is what keeps you in the game. It protects you from emotional blowups, from bad trades, from losing streaks, right? They happen to all of us, but it doesn't generate returns. And that is where most traders get misled. There's this narrative floating around the trading space that if you just master risk management, you will eventually become profitable. That as long as you only risk a little percent per trade and protect your capital, you will win in the end, right? But if your strategy has no edge, meaning no statistical or structural advantage in the market, then managing your risk is just managing how fast you lose. You're not fixing the root issue. You're just bleeding in slow motion because your strategy isn't profitable. And if your strategy isn't profitable, no amount of discipline can fix that for you. You can execute flawlessly on something that fundamentally doesn't work. That's like being proud of your posture while walking in the wrong direction, right? You might look great while being lost, but you're still lost. Before we go any further, let's be fair, right? You absolutely need risk management, as I just said, right? Especially when you're building your system, when you're learning from your trades and you're trying to spot patterns. Risk management is the only thing that keeps you from blowing up, right? You should never go all in, never over leverage yourself, right? You use risk management to survive the learning curve, but don't fall into the trap of using it as a substitute for a working system. A lot of people do that. In other words, risk management keeps you alive. You still need to learn how to win. And most traders never make that jump. They stay stuck in survival mode for years. So many traders, they spend months, sometimes years, following textbook risk rules, journaling their losses, telling themselves that they're doing everything right, but they're still not profitable. Why? Because they never built an actual strategy with edge. They're just being disciplined losers, following rules that keep them alive while bleeding money, trade after trade after trade after trade. And at some point, the problem isn't your psychology, it's your system. If your system doesn't work, discipline just won't save you. So let's talk about what actually makes you profitable, right? It's an actual edge. It's understanding the market context. It's being able to identify repeatable setups. It's having conviction in your system. This one's important. And it's knowing when to press the button and when to protect your capital. So what's an edge then? An edge is a repeatable condition that gives you a positive expectancy over a large sample size, right? And it's something that you have back tested and live tested, right? I don't want to hear about people only back testing. You need to forward test as well. Something that you have back tested and live tested with results to prove it. Something where you understand why it works, not just that it works. You want to understand why it works. It's the only way to have an actual edge, and something that you can spot in the wild with confidence while it's happening in front of your eyes, right? You need to be able to read price action and actually spot your setup. And then you need data, you need testing, you need clarity on win rate, on average risk to reward, on the frequency of the setup, the market context that it works best in, and how you personally execute it. If you can't say yes to all of that, then you don't have an edge yet. And that's okay. Most people don't in the beginning, so don't stress about it. But it's important to be honest with yourself if that is the case and not confuse following risk rules with having a strategy. Many people confuse the two, and they say, man, I just need to work on my psychology. No, you don't. You need to stop trading setups that don't work. That's what you need to fix. Psychology only becomes a problem after you've built something worth trading. It's not that your mindset sucks. It's that deep down, you know that your strategy is shaky. You don't trust it. You don't believe in it. Once you have a valid strategy, one that actually produces results, that's when risk management becomes a weapon. Because now you're not just surviving, now you're scaling. Now you're position sizing helps you compound capital, not just protect it. Now you're adjusting risk dynamically, scaling in during high quality periods and pulling back during choppy conditions. You're not just risking 1% blindly in every trade. You're optimizing risk based on confidence in the setup, market volatility, the context of the session. That's real risk management. Not the set it and forget it, not the 1% per trade forever, right? But adaptive, intentional, strategic. And this is the part most people skip. They try to size their way to profitability before they've built something that works, right? They'll tweak stop losses. They'll adjust position sizing. They try 2R targets instead of 1.5R, but the foundation is missing. Think of it like this: a losing strategy with good risk management, that's just slow death. A losing strategy with poor risk management, that's instant death. Like, that's when you blow up in a single day. A winning strategy with poor risk management, that's fragile, right? It's a winning strategy, but if you're sizing too big, that can still mean death to your account. And a winning strategy with good risk management, that's just powerful, right? You need both, but they come in order, and strategy is first. So why is risk management pushed so hard as the holy grail? First of all, of course, as I said, it is important, right? It's very important through all stages of your trading career. But it's also because it's simple. It's safe to teach. It doesn't require results. It's easy to explain. It applies to everyone. So beginners just get flooded with, don't risk more than 1% and use a stop loss in every trade and make sure you journal and you will be a profitable trader in no time. Those are all valid points. But again, none of them actually make you profitable. They're just going to delay how long it takes you to realize that you're not profitable yet. So let's look at two traders. We've got trader A. He risks 1% per trade. He takes 10 trades a week and his win rate is 35%. And his usual risk to reward is 1-to-1. This trader is losing 6.5% of his account per month consistently while following every correct rule in the book. And then you've got trader B. He risks 1 to 3% per trade, depending on the conviction, but depending on the context of the setup, depending on what the market is doing. His win rate is 50%, and his usual risk to reward is 2-to-1. Strategy is simple, repeatable, and tested. And trader B can have bad weeks, right? We all can, but over time he will grow because the system works. And risk management in this case is used to amplify that system, not to cover for its flaws. So the final question: what if you're stuck in that middle zone, right? You're being disciplined, but you're not profitable. Here's the roadmap. Stop tweaking risk settings to fix a broken system. Risk tweaks won't fix bad strategies. Then you take an honest look at your strategy. You strip away the emotion and you ask yourself, does this actually work? Not sometimes, but does it actually work over time? To really get an honest look at your strategy, you need to log your trades in a journal. Let the data speak. And if the data tells you that all you're doing is losing money slowly over time, the next step is to build a new system. Figure out what doesn't work in your current one. Take it out. Figure out what does work and double down on it. And once you've got more data after tweaking the system, once the edge is clear, then start optimizing size for performance. That's where the real gains come from. So let me wrap this up with one sentence that sums everything up. Risk management is how you stay alive. Real strategy is how you grow. Don't confuse surviving with succeeding. Yes, you need risk management, especially when you're still learning, but don't use it as a crutch to avoid the real work, which is building a system that actually works. You don't become a great trader by learning how to lose well. You become a great trader by learning how to win and then protecting those wins with discipline. A lot of people think that you become a good trader by just learning how to lose, and that is important as a trader. You need to be able to take a loss, but you absolutely need to learn how to win. If this video gave you clarity, give it a like, maybe hit subscribe. I post raw, honest trading content that doesn't baby you. If you want help building a strategy that actually works, not just tips and fluff, I've got plenty of videos about that on the way as well. So thanks for watching.